All right, welcome back to another episode of the Black Bullion Show. We will have textbook CPI deflation. Why? Because the CPI just fell 0.8% in April alone. So before we begin, I just want to say, if you are new to this channel, please subscribe to the channel. Also, please give the video a like to help get this economic evangelism out there to the masses. Helps the YouTube algorithm do that. And if you would like to just get a quick synopsis of this video without having to watch the full thing, check it out in the description below. Let's get into it. So this was the largest monthly decline in CPI since December of 2008. Yes, you heard me correctly. It's been 12 years since we've had this large of a drop within a single month of the CPI. And here we have this article by Niels Christensen entitled "Gold Prices Holding at $1,700 as U.S. Consumer Inflation Falls 0.8% in April." Now, check this out. Niels Christensen of Kitco also writes, "The leading decline in inflation was a massive 20% drop in the gasoline index last month." So that is the leading part of this decline comes from the gasoline index last month with this 20% drop. April was an unprecedented month for the oil market, which saw price fall into negative territory for the first time in history. We keep breaking records, guys, and we just hit a record that we haven't hit since December of 2008. So things are getting crazy. So let me pose this question to you guys. What do you think the actual CPI number is today? Well, I'm going to show you it right now. So for the CPI, for the 12 months ending in April 2020, it is 0.3. You are seeing this graph correctly. This is the lowest it has been for a year. Now there are fluctuations within month to month, but for a full year, this is where we are, 0.3. In April, I have been referring to the CPI number as being 1.5. You might recall. Now it's at 0.3, so it just dropped dramatically. So even just take a look at this chart here. This is the lowest. This is the lowest bar in this whole graph, and obviously, what I was saying in videos, back in April, was that we currently have inflation. It's a little bit below, where we were in 2019 of 2.3, but we were roughly around the same area of where we were in 2013. So, I expect things to slowly start to, trend lower, but, we'll see. I did not expect it to drop this much. And now, obviously, gasoline plays a huge role in this, but I wasn't expecting anything like this. Now, what does that say? Well, before we get into that, what does that mean for gold? Obviously, we know that inflation, or more so specifically, real interest rates, weak real interest rates are good for gold. In order to get weak real interest rates, you need higher inflation. You need, just like in 2011, numbers like this in order to get that really nice boost. Now, again, I do know the CPI is a very flawed system, but I am primarily referring to this for its trajectory. Yes, these numbers may not be accurate, they may not be correct, but I'm referring to the general flow, the general trajectory of inflation, and then some deflation, and then inflation, and then some deflation. I think that's something that we can obviously see that is currently happening. It's not like this number is greater than this, is relative to this number. this number should not be greater than this number. So we know it's not that inaccurate. We just know that the numbers are probably a little bit lower than what they should be. But the general trajectory is probably on par. At least it is right now, just looking at this huge drop here. So what does this mean for gold now that we see this lower inflation? I can tell you what it means. Absolutely nothing. Because as I've said before, based on historical data, just take a look back at the gold price as it moved during after the the crash of 1929. Take a look at that historical data, how the price moved. It dipped, but then it went back up. And speculative studies. Take a look at some speculative studies, and you'll see how gold during deflation tends to just hold its value between real estate, stocks, gold, bonds, and cash. Gold actually performs the best within a 5-year period. I shouldn't say a 5-year period, but in the short run, gold actually tends to perform best. In the long run, cash will be on top in most normal circumstances of a deflation. And gold will, out of those 5, will likely be in third place, with bonds ahead of it, stocks below it, and real estate at the very bottom. That's just how some of these speculative studies have been, have seen gold perform. So generally, gold will hold its value. Whatever its value should be, it will get there, and then it will hold. But as far as the CPI is concerned, and its drastic drop, what do you think about this? I know some of you guys, don't even want to focus on inflation, and obviously there's a lot that kind of goes into the CPI. But as far as this dramatic drop here, just let me know what you guys think about that, relative to what you see here with other numbers. Let me know that in the comment section below. Also, please give this video a like. Please subscribe if you are new to the channel. And once again, it's Black Bullion.